Hi everybody, we're having a look at Bitcoin and we are on the monthly chart. And on this chart, the first thing that I can see that is very much important, guys, is the fact that we have this candlestick over here. It is a bearish candlestick with a relatively small body and quite a long lower wick. And what that tells us is that we have a lot of money stuck at this level in the form of liquidity, and that in the future we will possibly see price head down to grab that liquidity, and then from this point possibly push further up. Another thing that I see that is also very much important is the fact that we have this structure over here, which is an M formation, and it has a neckline at that point. By now you guys know that whenever it comes to the structures such as the M formation in this particular instance, we know that ideally we want to see price break into the bottom side of this neckline over here and then heading back up to the neckline to test it. And at this point where the neckline is where we would look for those potential selling opportunities. So in other words, because we have this M structure which has a neckline at that point, we want to see price come back to this neckline to test it, and at this neckline over here is where we would look for those potential selling opportunities, right? And another reason why I say that at this point we should be looking for those potential selling opportunities is because, as I said, guys, we have this M structure, and let me just actually draw it properly. We have this M structure. In my humble opinion, it started more or less at this point, right? Gave us the first leg of that M, and then gave us that second leg, and then we saw price break into the bottom side of that neckline, and then price went back up again to the neckline to test it. And at this point is where, as I said, we expect price to move further down to around this level. Why do I say this level? That is because, as I said, it started at this level, and ideally I would love to see the formation end more or less at this level. Just remember also that I spoke about how we have this candlestick which is carrying that liquidity at that level, and just remember that liquidity is actually money that needs to be triggered by the market at one point or another, right? Anyway, I'm just gonna add a neckline for that huge W, or rather M structure. Let's have a look. There we go, right? We could say that the neckline of our M structure is at this point, and then I'm just going to utilize the Fibonacci retracement tool just to see if that neckline aligns with any key numbers that we have on the Fibonacci retracement tool. So just bear with me, guys. Let's have a look. Fibonacci, Fibonacci, Fibonacci. Let's see. Right. So we can see, guys, that the neckline, which is over here of this M structure, aligns with, we could say, the 23.6% Fibonacci retracement level. So that adds as confluence in as far as looking for potential selling opportunities at this point, right? It adds as confluence and confirmation. Having said that, we're not just going to sell by virtue of having price reach this level over here. We're going to have to look for further reasons for why at that point we should be looking for those potential selling opportunities, right? Anyway, from here what I'm going to do, guys, is head down to the weekly chart. And here we are on the weekly chart. Let's just zoom in a bit and see what's going on this particular chart. So what do we see, guys, on the weekly chart that we should be paying attention to? On the weekly chart, I can see that we have this candlestick over here. It is a bearish candlestick which has a small body and quite a long lower wick, and by now you guys know that that means we have a lot of liquidity stuck at that level, and liquidity actually represents money that needs to be triggered by the market. So there is plenty of scope, guys, for the market to continue to push further down, and that is because, number one, as I said, we have this candlestick over here which is carrying a lot of liquidity at that point, and number two, we have a similar candlestick on the monthly chart at the bottom which is also carrying a lot of liquidity, right? Anyway, let's proceed, guys. So what else do we see at this point, which is the weekly chart? Another thing that I see that is also very much interesting, guys, is that as much as I said we have this M structure over here which has a neckline at that point, can you guys also see that we have another W structure at this point, right, which similarly has a neckline more or less at that level, right? So what this means is that buying or selling at this point is a bit risky. Buying or selling at this point is risky because the market could go in either direction, right? Why do I say so? That is because, guys, we have two opposing structures. Number one, we have that M structure, right? We have that M structure, which is over here, right? And number 2, we have the opposing W structure, which is at this point over here, right? And they both have necklines more or less at the same areas, right? And this means that buying or selling at this point is a bit risky, because what may possibly happen is that we might see actually, let me just do this. We might see in the case of this M structure, right? Remember I said price broke to the bottom side of that neckline and went back to the neckline to test it. And at this point is where we might see price push further down. And in the case of the W structure, which is at this point, which also has a neckline at that point, we can see that the neckline has been broken to the upside. And what may possibly also happen is that the market may push further down to around here to test that neckline, and we might then see price push further up. So that's the reason why I say that buying or selling at that point is a bit tricky. And yeah, nonetheless, having said that, let's head down to the smaller time frames to see if we can possibly get away with these opposing structures. Anyway, another thing that I see, guys, that is also very much interesting is that we have this candlestick over here, right? It is, let me just zoom in a bit. It is a bullish candlestick with a small body and quite a long lower wick. And what it tells us as well is that there's a lot of money stuck at that point, and that in the future we will see price head up to that level to grab that liquidity. In fact, before we continue, guys, I just want to add a neckline for that W structure, because it's also very much important. There goes the neckline of our W structure, right? Right. Anyway, what else do we see, guys, in regards to the weekly chart of Bitcoin? At this point, I don't see much, so what I'm gonna do now is head down to the daily chart. Let's have a look. Here we are on the daily chart. So in the regards to the daily chart, guys, we can see that we had actually this level over here, right? And it's a level where price had been moving sideways for quite some time. Can you guys see that? And I believe that we will see, or rather we saw a breakout of sorts, right? At this point we saw price breaking up to the bottom line, or rather to the upside. And just bear in mind that we also spoke about how we have this W structure which has a neckline at that point. To add to that, we also have this neckline, which is the neckline of that bigger M structure that we spoke about on the monthly chart. Just keep that in the back of your mind. Nonetheless, let's continue, guys. So the next thing that I'm going to do in regards to the daily chart is to add my daily channel. Let's see, how would I add my daily channel in this regard? I would add my daily channel in this manner. Just bear with me, guys. There we go. There goes our daily channel, more or less. There we go. And in regards to the daily channel, or in as far as the daily channel goes, we can see that the market is in an upward trajectory, right? We're in an upward trending market, right? Nonetheless, it's still tricky, right? Or risky in as far as buying or selling at that point, for those reasons that I spoke about earlier, right? Anyway, let's continue, guys. Let me just zoom in a bit. So what else do we see on this chart that we should be paying attention to? Remember, guys, on the weekly chart I spoke about how we have that huge W structure over here, which has a neckline at that point, right? On the daily chart we have another similar W structure here, right? It's an overextended W structure because that first leg, which is over here, is much higher than the second leg. And similarly, it also has a neckline more or less at that level over here, right? And what this means is that the anticipation at this point in time is for price to head back to this point, and at this point over here is where a lot of traders and investors will be looking for those potential buying opportunities, right? Having said that, just keep in the mind, or rather keep in your mind, the fact that we have on the bigger time frames those two opposing structures, as I said, and I said that price is here at this point, and buying or selling at this point is a bit risky, right? So as I said, guys, the market may come back to this level, which is the neckline of this W structure, as well as the neckline of that bigger W structure that we have on the bigger time frames. And at this point we might see price push up and perhaps to this level. Why this level? That is because this level is also the neckline of that huge M structure, and at this point we might then see price move further down. Can you guys see that? Right, I just hope my drawings are just, you know, not too confusing. I'm just trying to make sure that you guys understand exactly what it is that I'm referring to, right? Anyway, from here what I'm gonna do, guys, is head down to the H4 chart. On the H4 chart, I'm just gonna fix my channel somewhat. Let's have a look. Let's have a look. And just remember that for the most part, we need to make sure that all of our drawings, or all of the drawings that we add to our charts, are as accurate as can be. Let's have a look. Let's have a look. Let's have a look. Let's have a look. Just bear with me, guys. Let's see. Let's see. Let's see. Right, there we go, more or less. There we go, more or less. Right, so just to recap, guys, remember on the daily chart we spoke about how we have this W structure over here, which has a neckline at that point, and I said to you guys that we might potentially see price come back to this level to test it, and at this point we might then again see price push further up. Right, anyway, let's zoom in. And the first thing that I'm going to do, guys, in regards to the H4 chart of BTC is to add my channel as well. Let's see. And there goes my channel somewhat. Just bear with me, guys. There goes our channel, more or less. There we go, there we go, there we go. Right, remember, guys, as I said, we spoke about this level, which is the neckline of that W structure we spoke about on the daily chart, and I said to you guys that we might potentially see price head back to around this level. Right, anyway, let's zoom in and see what's happening on the H4 chart. On the H4 chart, we can see that we have another M structure over here, which has a neckline at that point. Right, so we've got a double top, and I can tell you now that a lot of traders and investors have actually started selling at this point. Why? Number one, we can see that, if I can just zoom out a bit, we can see that the market is close to the neckline of that huge M structure that I spoke about, which is at this level. Number two, we can see also that the market has given us this very nice M structure over here, right, which has a second leg at that point. Right, and if I can just zoom in a bit, what else do we see? Another thing that I see is that we have an inside bar formation at this point, which serves as confirmation in as far as some investors and traders go, that indeed the market needs to push further down. Right, a lot of traders and investors are also waiting for the market to actually close below this level before selling. Let me just actually add a neckline for that structure. There we go. That's the neckline of this particular M structure over here. Right, and as I said, guys, a lot of traders are actually waiting for price to close below this level, and at this level is where they will be looking for those potential selling opportunities, maybe to around this level over here, and others will hold till price possibly pushes even further down. Right, that's it, guys, as far as my analysis goes. I hope it makes sense. Having said that, just in conclusion, remember, guys, on the bigger time frames I spoke about how we have that huge M structure together with that huge W structure, and I said to you guys that they both have necklines at more or less the same area, right, in this manner, and price more or less is at this point. And I said to you guys that buying or selling at this point is a bit risky. Buying or selling at this point is a bit risky. So what's the solution? In my humble opinion, the solution is to either, if you're looking to buy, is to wait for the market to close above this neckline of this huge M structure, and then once price does so, wait for the market to head back to the neckline, and at the neckline is where you should be looking for those potential buying opportunities. And if you're looking to sell, rather wait for the market to close below this smaller W structure. Let me just actually redraw it. Right, if you're looking to sell, rather wait for the market to close below this W structure, and then potentially look for those selling opportunities. Right, so that is it, guys, as far as my analysis goes. Having said everything, buying or selling at the zone is a bit risky because the market could go in either direction. Right, anyway, peace out.